it's hard for people to imagine what's possible because so much hasn't been possible up to this point.
Take the first step towards online privacy. Get NordVPN.
Tokenmetrics AI analyzes millions of data points to uncover hidden gems, delivering buy and sell signals you can trust. Our AI spots tokens before they moon, helping you stay ahead in the fast-paced crypto world. Join tens of thousands of investors who have taken their portfolios to the moon and beyond.
This is an audio recording of an X Space courtesy of thecoinrepublic.com, the go-to place where you can keep up to date with what's happening in the crypto space. Hey Clayton, can you hear me okay?
Yes, can you hear me okay?
I can hear you absolutely fine. Thank you so much for agreeing to do this and for making yourself available. And I was saying that this is the third time that you and I have had a conversation together. We did an interview, I think, a couple of months ago about Litheum.com, and then recently we did a conversation between you and me and Freaknik from mathnodes.com, also sentinel.co, which is a decentralized VPN, which is becoming increasingly more important in the world. But this time, on this platform, we're going to find out about Litheum because people aren't going to know about it. Do you just want to say a little bit about your role with Litheum, and then we can go into what Litheum is?
Yeah, sure. Well, my role is a technical founder, so I've been doing software for like 20 years, and I've been building in blockchain space since around 2017. So this is sort of my third go-round, I guess, in the entrepreneurial space of the blockchain world. And yeah, we've been building for like 3 years. We've got a small team just in testnet now.
Okay. So you got Litheum in testnet. And when did Litheum start?
It would have been early 2022. But it's kind of it's a bit of a story there because actually I was working at another L1 in Beijing, actually, funny enough, started by a couple foreigners who were also a bit crazy. And so that I had been there a little over a year. And that's where, I mean, I don't know who has time to follow like the L1 white paper space, but I really didn't know anything about like consensus design or, you know, what the sort of different competitors were in the scalability problem until I got there. And then that's where I started to really think about it.
Okay. Now, for people who don't know, do you want to say what is meant by an L1?
Yeah, so I think there's different ways to interpret it, but for me, what it means to me is a sort of self-reliant consensus, right? So I mean, you can call it blockchain an application. So in a sense, it is also a decentralized application. But the thing that's different about an L1 is it has its own consensus, and so it bootstraps the whole thing by having a coin and then using that coin to incentivize miners or validators or runners, as we call them, to do their thing, and then you sort of have a platform, and then you can put the dApps on top of that. And for me, an L2 can be, I mean, I kind of think of a dApp as an L2, but I think most people think of an L2 as like, all right, that's the next level of infrastructure, and then you put the dApps on top of the L2. So L2s can do a lot of things. And then I guess just to complete the picture too, like I think there's a lot of gray area between like what's a bridge and what's like a layer 0 and that sort of thing, right? Yeah, like you have the Polkadot space where they had parachains, and then it was like they were going to do the cross-chain messaging thing on Polkadot itself. So that's kind of like a layer 0, right? But really a layer 0 is kind of a funny term. And I think that confuses the issue about what an L1 is, because really to me, a layer 0 is just a bridge, or it's an interoperability, a chain that focuses on interoperability.
Okay, Clayton, just to make it really, really simple and so people can begin to create it, I think I know the answer to this one, right? But I'm going to ask you. So which is the biggest layer 1 by market cap?
Well, that would definitely be Bitcoin, right?
Well, is it? Wouldn't it be Ethereum? Because I think of Bitcoin as a coin. It's just a coin, a value exchange. Now, development.
Right. But I remember you mentioned that in one of our other conversations, and I sort of was surprised that you didn't consider Bitcoin to be an L1. I guess you wouldn't call L1 Bitcoin. You wouldn't call Bitcoin an L1 in the sense that like it doesn't really have L2s. So what is it? But like to me, when thinking about like, to me, it's just a blockchain, right? That's really what L1 means. So maybe that's a different way that I think about it. But there also is the space of L2s happening now on Bitcoin because they've got the tap root, and then they're able to sort of do stuff that's sort of like smart contract stuff or programmability a bit into the L1. And then once you have programmability in the L1, then you can do more interesting things. So I'm actually very good friends with the founder of BitLayer, which is a Bitcoin L2, I guess.
Okay. Well, we should speak about that separately, about your contact with BitLayer. Maybe they would be up for coming on as guests on this. But I'm gonna for crypto doofuses like me, because you're a very technical guy. You can read blockchain code and write blockchain code, right? So to make it really, really simple, I consider cryptocurrencies like that are money, like Bitcoin, Monero, Pirate Chain, Dash, Doge. Those are just means of exchange. Whereas Ethereum, ADA, Solana, and now Ripple, sorry, not Ripple, actually Ripple is, but Lithium, I meant, are layer ones that you can build applications on, platform protocols, programmable money. So if people think about Solana and ADA and Ethereum, and I think Lithium is out to enter into that space. Would that be accurate?
Yeah, for sure.
Simplistic.
I mean, I think one thing, one thing definitely true about that viewpoint is that if you're not Bitcoin, you sort of need a different value proposition, right? And so, I mean, I think most people perceive Bitcoin as being the premier token or premier coin, right? And so, obviously, there's another game to be played there. And an interesting thing that comes along with that is you can kind of think of the utility then of like an Ethereum or an Ether, I should say, because they do actually distinguish the name of the token, which is Ether, from the name of the network, which is Ethereum over there, which can be useful to sort of disambiguate these concepts, right? But that's interesting because then the Ether becomes swappable for gas, right? Which is how you drive the smart contracts. I think that most people are at least aware of that, since you have to pay it every time you use the network. And the gas obviously is a little bit confusing because it's tied to like what the EVM is doing, like the different functions you're calling it, or the bytecode and the instructions in the EVM cost different amounts, and so it's a little bit opaque there, like why one thing might be more expensive than another. But that can also be a benefit to the token, also, right? Because you have more utilities, more value, right?
Yes, absolutely, more utilities, more use, and I mean, if you just look at how Ethereum has grown in value, how Ether has grown in value as a token, and how Ethereum has grown in utility, that not only do we have all these applications being built, we have, I suppose, what might be called ice layers like Polygon, and that run on top of Ethereum to make everything faster and cheaper. Now, Lithium is entering that space and is a little bit distinct, a progression on what's been accomplished before in that area. So do you want to say, now I'm going to ask you to keep this in as simple terms as possible.
Yeah,
because
you're always challenging me to simplify it even more. I think you should hear. I mean, I think it's a little complex. Yeah. Well, if you think the pitch now is difficult, you should have heard it 3 years ago, right? Because it was extremely technical. But I guess the simplest place to start is probably what the problem is that we think we're solving. And if you look at Ethereum and Bitcoin, I think they're the most trusted, and I think that's correct. But people don't necessarily understand why they're the most trusted, but it's actually because they're so limited. So if you look at like a Bitcoin, what they call a full node, or an Ethereum RPC node, they're much cheaper to run than on other networks because the chain itself is so limited. And that limitation is actually, it's funny enough, it comes roughly to be the same on both networks. So it's about 1 million transactions per day. And we call this problem the trilemma, but basically there's an interplay between what we call decentralization and this scale. And the paradigm that everybody's in right now is that those things go against each other, that as you try to scale up a blockchain, it becomes less secure or less decentralized. Everybody's sort of just stuck in that paradigm. And what Lithium's approach is to try to understand the fundamental cause behind that. And it's actually pretty simple. It's just because you have these RPC costs that aren't paid for by the consensus. And because those costs grow as the scale grows, somebody has to provide those, but the miners have no reason to do it, and the validators have no reason to do it. And so that's the economic game that drives it towards centralization. And so the whole concept behind what we call proof of performance is to get rid of that.
Okay, now RPC, I know you have told me what this is before. Please tell me again, I've forgotten.
Yeah, well, so I mean, you don't have to really remember the acronym, but it's remote procedure call. But all it means is we use it in the blockchain space because, like, literally all a miner does is RPCs, right? Everything that's like a quote unquote network application is doing RPCs typically, and that just means one computer talking to another computer. Okay, um, I mean, we don't always use the term RPC, but you can think of it that way. And the reason we distinguish a miner from an RPC node and we call them RPC providers is because they're providing the RPCs that aren't incentivized. So although it means like this technical thing about one computer talking to another computer, in the blockchain space, when you hear the word RPC node, what you can think is just the critical things that a blockchain needs to do that the blockchain itself doesn't pay for, right? And so then you have to have some
Right.
off-chain or third-party means of paying for those things, right? So often the dApp developers pay for them, or in the case of like a MetaMask, you have the MetaMask also needs some RPCs, and that's provided by Infura, which owns MetaMask, by the way, right? That's Joseph Lubin's company, who's a founder of Ethereum. But that's like a big data business model at the core of this thing that's like the number 2 blockchain, or as you said, the biggest L1. And we'd love to get rid of that because it's a security concern, and it's also a decentralization concern, because like there were cases where, you know, Venezuelan nationals who were on some bad actor list were, you know, and if you had to block them because the U.S. government insisted that they do that, and they don't have a choice because they're centralized in the U.S. and they're a corporation in the U.S., so they have to comply with that.
Okay. So then going back to the trilemma, security, decentralization, and then the third bit, speed and cost, which is four now.
Yeah, see, this is the thing about the trilemma is like, honestly, like it's not even important to remember what the 3 are, because it really is just about the decentralization and the scale, and nobody gives up the third one. The third one is security, but that's a bit of a strange thing to mix in with decentralization, because to me, I think when people think about decentralization, one of the big things you get is a type of security, right? And security is not a very, you know, that can mean a lot of different things, right? But yeah, you're never giving up the security. It was just more of like an academic thought about like, you could have maybe something like a BitTorrent or something like that, and comparing that to like a traditional Web 2 architecture, and comparing that to maybe a blockchain, and saying, you know, each of these is a distributed network and they have 2 of these 3 properties. But for the purposes of like, we want to solve this problem and get blockchain and decentralization to deliver to the whole world, it's actually not a very useful concept, because you can't give up the security part.
No, because it wouldn't work as money or as an application if it wasn't secure in some way. Okay, now for the end user,
Right.
for ordinary lay people like myself, right? What's the advantages that Litheum promises or offers over other platform protocols?
Yeah, well, that's actually the most common question I get, and funny enough, it's actually kind of the hardest ones for me to answer, and that's why I have Alex and Greg helping me with this a lot. But the short of it is, it's like asking like, what's the use of this internet thing? You know, I remember there's a video of Letterman talking to Bill Gates, and Bill Gates is like, "Oh, we live streamed a baseball game," and Letterman's like, "I have a radio," you know. But we're still at a point in this industry where I think it's hard for people to imagine what's possible, because so much hasn't been possible up to this point. So we've got DeFi and we've got the bridges, and those are awesome. But like, it's very hard to build something like SocialFi or GameFi in a way that the price of the gas is low enough that you can start to do more creative things, or AI, right? Or identity. All this stuff is very high data usage, and it can't really compete at the price point with DeFi, because people are willing to pay a very high fee to like swap their liquidity around if they think they're going to make more money, but they're not really willing to pay to like share their friends list with somebody, or add a friend to their friends list, or whatever. These sort of lower value per transaction, or like our friend Freaknik, like opening a session every time you want to use a VPN. Like, imagine every time you want to use your VPN, you have to pay 1 cent. You might do it if you thought the VPN was better because it was decentralized, but you're not going to pay $1.
No, absolutely. And just on that point, the VPN.
So there's all this stuff. I mean, everything you think of that might benefit from decentralization is ripe, I think, once we solve this problem. But right now we're still in this space where everybody, even if they're not really conscious of it, they're subconsciously in this trilemma, and therefore we're compromising on a lot of the things we could do. Obviously, Lithium, we're very focused on microtransactions and like pay as you go is a big one, but also like RWAs and other things that we think Lithium could be really great at.
Okay. Well, look, let me translate that or tell you what I hear in that, right? So the advantage of lithium, and this is from the previous conversations we've had, is that it's incredibly fast and incredibly cheap, like almost free. So, if someone's going to change it, do an exchange of $1,000 worth of crypto, then paying 10 cents for that transaction, not a problem. But if, like you said, you're doing something on some decentralized social media, you're not going to pay 10 cents every time you want to transact or to carry out a function on that. So you want something that's like almost free.
Yeah.
And really, really fast. And my understanding from what you've told me about lithium in our previous conversations is that it's incredibly fast and also incredibly almost free. Would that be correct?
Yeah, I mean, I like to talk about numbers to give people an idea about this. One of the problems with talking about the cost of things is that a lot of times other chains are subsidizing it, right? So if you go on Base, for example, like you can do 5 transactions for free forever, but that's being subsidized. But one of the things I like to point out is the difference in the capital outlay to drive these systems and then the performance you get relative to that capital. So if you look at Bitcoin, how much capital is deployed for miners, it's somewhere in the order of 200 billion. And this is like based on estimates from Bitmain's IPO filings, which are 5 years old. So it's probably even higher by now, $300 or $400 billion. If you were to take that same amount of capital and deploy it into like a cloud infrastructure.
Clayton, hold on a second. So you're saying the total paid to Bitcoin miners or all cryptocurrency miners is over $200 billion?
No.
So okay.
No. The hardware that's earning the mining rewards is 200 billion.
Wow.
The reward is going to be like somewhere around 10% of that.
Right.
You can do the math real quick if you wanted to. Just knowing its 10-minute blocks and the amount of the block reward and the price of Bitcoin, you can get an idea of that number. Right. But I'm just talking about the capital expenditure. The technical term for the accountants in the group. It's slipping my mind, but yeah, how much is invested in the miners themselves? And you can also think about, similarly, you can think about how much Ethereum is being staked, right? Because that's also capital being used for that purpose. It could be used for something else, right? I mean, the people who are deploying that capital could buy houses or invest in Google or some business that's going to give you an actual ROI. But what I like to talk about is you compare that number to like if you were to take that same amount of capital and deploy it into an Amazon or just some normal compute infrastructure for like a large scale application, and the result of that thought experiment is that you get a chain or you get an infrastructure that is something like 1 billion times more performant than what you get on a Bitcoin or an Ethereum. Wow! So the blockchain should be more expensive than an Amazon because, let's say you're just trying to create google.com or facebook.com or something. You do need some redundancy, but you don't necessarily need like 10,000 nodes like you would for validators or miners. So it should be a little more expensive, but it shouldn't be 1 billion times more expensive. It should be maybe 1,000 or 10,000 times more expensive, like per unit of compute. So that difference between the 10,000 and the billion is where we think we can drive it to, because one way to think about proof of performance is that instead of incentivizing people to deploy hashing, we're incentivizing them to deploy the things a blockchain actually needs, which is bandwidth, memory, compute. And that's done in a way that's economically played out in the consensus so that it drives it to sort of the least common denominator as far as whoever's deploying the most efficient use of their hardware, setting up their firewalls the best way, getting the cheapest hosting or whatever. Obviously, they can make the most. They can benefit the most from the proof of performance by earning the same amount as someone else who's maybe deploying less efficiently. So basically, it drives the cost of access to the blockchain to like the physical limitation of the actual hardware. Now, we don't really know exactly how that's going to play out, but we can say that it theoretically will be cheaper than anything else.
Right. Okay. So then so the plan is that once it launches, that a user would barely notice the cost, but they would notice the speed because it'll be super fast.
That is the hope.
Okay.
Yeah. Another way to think about that is like, what if you had everybody on the planet paying $20 per year for access to your blockchain? Like, how much revenue would that be? And it's, $200 billion, right? So you could incentivize quite a lot of hardware for that.
Yeah.
And nobody would really notice $20 a year, right? And you could use a chain that was that large, or a proof of performance based chain that was that large, could do many, many, many transactions per day for everyone on the planet. So there's some sweet spot in there where, I mean, you do get diminished returns on scale eventually. Like, usually, like if you say like you want to buy a hard drive, for example, usually if you double the amount you pay, you're going to get more than double the performance, up to the point when you're buying like the most high end hard drive from Samsung or whoever. It actually blows up, right? There is no hard drive that's 10 terabytes yet, or 100 terabytes or whatever. So at that point, you kind of hit the other side of the S curve, and it becomes less efficient per dollar. But there's some sweet spot in the middle there where people should be able to deploy very, very large, powerful systems, and we get a very, very high performance blockchain out of that. That's also very secure. So that's another thing that's really important to point out, is that as the usage of the chain gets bigger, people deploy more and more hardware, and it also gets more secure. So this goes very much against the grain of the trilemma thing, where usually people think as the chain gets bigger, it gets less secure, but the exact opposite is true with proof of performance.
Okay. So this is going to be way more secure, much faster, much cheaper. And when is it launching?
That's the dream.
That is the dream, right?
Actually, we're at a very, very interesting point now. Yeah. Well, I mean, to me, it's an existential problem for the industry to solve this problem.
Yeah.
I know a lot of people are invested in the vision of having 1,000 different blockchains and like a different blockchain for everything you want to do. I don't think that's very viable as a user experience, and I also think it's less secure than if you can consolidate all of your capital that's securing the decentralization in one place. It's much more secure. It's like having one giant castle versus having 1,000 little castles, right? Like if you have 1,000 little castles, then like any one of those, where if you want to store your money in one of those places, right, you'd prefer the big castle. But yeah, sorry, what was the question? It's very late here.
Well, when is mainnet launching?
What is mainnet? Right. Yeah, we're hitting a very interesting milestone because we're just about to launch public testnet. So I'm actually doing the last major feature right now, which we call mini blocks. Mm-hmm. And we're hoping to hit mainnet in Q1 next year. It depends a bit on some strategic decisions, right? So obviously, I'm more eager than anyone to get to mainnet. You can launch it earlier with some risk, right? But nobody wants to see downtime on a mainnet. So, and it's not good for the brand, so to speak, and it's not good for the perception of the security. So there's a bit of a trade-off there, and I think I prefer to go a bit slower. But when I'm wearing my CTO hat, I prefer to go a bit slower. When I'm wearing my CEO hat, I want to do it yesterday. So
yes,
but we're getting very close to being feature complete on the mainnet. Yeah.
Okay, and if what people can do is you can follow Litheum on Twitter. On X, sorry, so by clicking on the Litheum icon in the X space and then following. And also the website is lithium.com. And because it's a public testnet, one of the opportunities of people here or anywhere really who get involved with this project early is, well, don't you wish you'd bought Bitcoin in 2009? I certainly do, right? So there is value in being way ahead of the curve.
There's also going to be a very cool opportunity in the early days where you should be able to run a node on commodity hardware, right? Like you can actually technically do gigabyte blocks on Bitcoin running on a laptop, right? That was demonstrated in like 2016. So we think for the first years with Lithium, if you've got a laptop laying around and a commodity internet connection, you can put that to work to run a runner and earn some Lithium on that. You will also have to stake. But everybody's got a laptop laying around, and we think we can hopefully leverage that, so we can have a very well decentralized network with 10,000 plus people participating in running runners. But people don't necessarily have to go out and spend a bunch of money.
You don't have to go and spend
buying a
$200
bunch of
billion
hardware.
on mining hardware for lithium. Nobody here has to do that. So you can do that.
Not yet.
Yeah. No, you said commodity internet. Do you mean high-speed Wi-Fi, high-speed internet?
Oh yeah, I just meant like you won't have to deploy a server in like a a data
Right.
center. Like you can just use whatever's piped to
Okay,
your
so
house.
this is a project that can be mined and staked on a laptop.
In the early
Is
days,
that
yeah.
correct?
I mean, it's very similar to Bitcoin in the sense that it will get harder and harder as the chain scales up, right? And so, like in the early days of Bitcoin, you could mine with a laptop, then you needed a GPU, then you needed specialty hardware. We're kind of going to be in a similar path, I think, right? But a laptop was going to be great for. I mean, you can do a lot with just a network made out of laptops if you're using proof of performance.
Right. Right. Okay. Okay. Well, that's an opportunity
Maybe
as well.
years before we get past that.
Yes. And again, if people want to find out, they can follow lithium.com and also follow on X. Okay. So you said the mainnet that you're developing, or the public testnet, is almost feature complete. Well, what are some of the features? Again, in lay speak, so that people can get. Well, okay. I think really what I'm interested in, and I think what people are interested in generally, is what's in it for me. So what's in it for a user
Yeah.
of lithium? Somebody wants to develop on lithium.
Yeah, so when we say private testnet, what that really means is we're running the nodes, but you can deploy a dApp. So if you're a dApp developer, you can come and try it out today. It's EVM compatible. You can use your usual tools like Hardhat and MetaMask. When we say public testnet, the features that are missing for that are like the actual rewards. So like if you run a runner, how much am I going to earn? How do I stake it? We also are developing what we call a runner app, so that you can deploy a little bit extra on your server, and then you can administer your server and see all the statistics about how much memory it's using, how much it's earning, how many transactions it's processing in an app, rather than having to go to your Ubuntu shell and run some obscure command or something. We want to make that really like a one-click install and something that anybody can potentially do.
Right. Okay. Well, that would be useful, and that could lead to further decentralization when crypto doofuses. So, like myself, there's no way I could set up Ubuntu or anything like that, or Linux. And I'm like, no. But that would be good, because then it makes the runners more accessible to more people. Okay, now you talked about runners, not miners, and you talk about
we think that's important.
What do you mean by this?
Yeah, so I mean, proof of performance is just a different type of consensus. It is stake-based, but it's different enough from proof of stake that we thought it deserves its own name. One of the biggest differences is that the stake alone doesn't let you participate in the consensus. You need to do it to participate, but you also have to deploy the hardware.
Right.
So it's sort of like it's got one foot on each side of the thing there. And yeah, the runners are just, again, because they're doing a different type of work than like a miner. Obviously, you wouldn't call them miners because they're not just searching for that hash the way a miner is. But you also don't want to call them validators because they're doing a lot more than validators, right? Validators just create and validate blocks. They don't provide the RPCs in a way. And proof of performance has sort of a double meaning because you've got the performance of the hardware that's doing all the things a blockchain needs, but you also have the performance in the sense that there's a win-win between the users and the network in a way that maybe isn't complete in other chains. And you're sort of forcing the network to perform almost like a legal performance, right? It's like, if I'm going to pay you to remodel my kitchen, right? In the contract, we have something that says, if you remodel my kitchen, I'll give you $1,000 or whatever, right? And then you perform that thing and then get the reward, right? So it sort of has that kind of meaning too. It's like, if you give me the data so I can make a transaction, that's how you do the work.
Right. Okay. And there are lots of different functions that the runners can perform.
Right. There's 3 different types of runners. So, and that's really just, it's kind of a distinction between the different roles that people make in doing a block. So if you think about just a classical blockchain sort of situation, you might have a situation where somebody, let's say they're interacting with a DApp. Okay,
Mm-hmm.
I get my data from one server, and then I send my transaction to another server, and then that guy sends it to somebody else who puts it in a block. So there's 3 different actors there that all play a different role, and it has a different economic relationship from the wallet and to each other. And so you have to distinguish those things and let people, be rewarded in a slightly different way for doing those 3 different things. And you can choose to be any or all of them. So the first one would be a data runner, the second would be a transaction runner, and the third one would be what we call a block runner.
Okay, all right. And then for the developers, I mean, I think it's pretty clear the advantage to them as well as to the end users is speed, almost free transactions. Not completely free, but incredibly, incredibly cheap. Because I suppose I think that this X space is free, but there is a cost in terms of the cost of the electricity to run my laptop, but it's tiny. So imagine we're talking about those kinds of relative costs.
Right.
So what's the advantage to developers other than those ones? And what will that make available?
There's two major things. So the one that's really easy to understand is you just don't have RPC nodes. So typically a dApp developer has to run an RPC node, and then the dApp talks to the RPC node, and then the RPC node talks to the rest of the blockchain. And that's sort of just how things work.
Like a rentier in the middle.
Excuse me. But that's a cost for the dApp developers.
Yeah.
And there's the monetary aspect of that.
Yeah. So the RPC is getting their cut.
But there's also the security aspect. And so, well, typically you run it yourself, so it's a cost for the dApp. You can also pay Infura or pay some RPC provider, and then they'll give you an API key, and you put the API key in your dApp, and then all your users use that API key, and then the provider will build the dApp foundation or whatever. They have to find a way to pay for this somehow. But solving that problem solves another thing too. It's not just the money that the dApp developers don't have to put out, but there's also the security issue. So there's a very scary proposition. Like if you were running Uniswap and you've got your RPC server, if somebody were to hack that RPC server, you could completely have your dApp destroyed because it would destroy the trust if there was some kind of a hack. Right.
That would not be.
And you're kind of liable for that too.
Yeah.
Right. Okay, so we also solve that because essentially the dApp is talking to the whole network, because you can talk to any transaction runner or any data runner. Like that's part of the consensus as well, is to inform the wallets or the end users about every node in the network. And then they can talk to them all simultaneously and confirm that they're getting the same data. And that data is also attested and comes with a signature. So if you talk to 10 data runners, say, and 9 of them agree on one answer and one of them tells you something else, you can actually penalize that person by having them slashed. So they can only provide you the correct information.
Okay.
So it's more secure. That benefits not only the dApp, who doesn't have to hold that liability, but it also benefits the end user, who can more trustlessly communicate with the network.
Yeah, no, that is a big deal.
Or I shouldn't even say more trustlessly. They can trustlessly talk to the network, because you can't do that actually on the current EVM compatible chains. You have to rely on Infura, and you have to rely on a single point RPC server. And this is what they call the data availability problem. If people want to ask their LLM about it, they're trying to solve it with ZKs and cryptographic stuff, which is part of the problem. But you also have to get the data, so that's sort of the other problem. The cryptographic stuff does solve the security side of it, but again, it's limited, right? If you want to solve the security side of it for 10 billion people, that's only Litheum, I think, can do that.
Wow. Okay. No, I definitely get the value of that. Okay. And then, one of the problems is how crowded the space already is. There's the layer ones that we already got.
Yeah.
And how, some like ADA and Solana and Ethereum are way ahead of the pack. And then there's the other ecosystems that are being developed. And then there's the layer 2s that run on top of the layer 1s. And then there's probably loads of other layer 1s that are platform protocols that are being developed that haven't yet come on this X space. And now we got this other one, Litheum.com. How on earth is anybody going to find out about you, apart from coming on Crypto Rich and the Coin Republic?
Yeah, that's probably our biggest challenge. I think we have a huge technical advantage, but how do you get it out there is always tricky. But I will tell you one thing we're not going to do, and I think people have made this mistake a lot is they kind of get enticed by like the whole token game. And, it's very easy. In fact, I've been through it myself. You launch a token, you get the hype, you make some quick, easy money. But it's also a killer for the project. If you're really trying to change the world, you have to be very careful about that. And we're not interested in a zero-sum game where parts of our community lose and parts of our community win. We want everybody to win by building real value in the technical value proposition, and having it be more of a slow growth. So what we won't be doing, and some people may be disappointed to hear this, is a lot of grants programs and a lot of airdrops and a lot of hackathons with huge prize pools. We don't want to attract that sort of crowd necessarily, because they just come for the money and then they leave. We want to try to do a bit more of a slow growth, organic, community driven, more, what can you say, legitimate sort of growth pattern where it's more word of mouth and earned media sort of stuff.
Yeah, like not a
Right.
flash in the pan. And I think the problem with crypto is, one, people have made incredible amounts of money in really short space of time. So then it creates an expectation. When Lambo, I want Lambo tomorrow. But that's not how a business gets built.
Hey, if you want the Lambo tomorrow, you can go get some leverage too. You know what I mean? So we're not stopping you from making a ton of money trading the Litheum token if you want, but there's some ways to do that, right? We don't necessarily have to have 100x in a week.
Yeah, well, the risk of leverage is that I will end up owing the bank manager 100 Lambos. So gotta be careful with that, right?
Yeah.
So one, it creates an expectation that, oh my god, my friend made money, or I made money on this meme coin, or somebody else made money on that particular crypto real fast. Maybe I can do it too. And then the projects are caught up in that as well, because they want to get a return real quick. But that's not how you build a business. Building a business takes time.
Right.
And, one of the things I say to my friends and family is, what really works in the space is patience. But, you and I have both come across stories of people, some guy who bought 100 million, billion, trillion Bitcoin and then sold when it was $1 each or something, because they thought, well, hey, if you'd have just waited, been patient. So patience pays. But then what are you doing to build the community? This sort of die hard.
Well, to be honest, you're the only person I'm really speaking to just because I like you, but we're not trying to do mass marketing quite yet, right? So we want app developers, and we want people who are interested to run a runner. Very soon, we're going to be trying to find those folks as well. But we don't really want to do like a mass thing until we have a mainnet and a token, because really we're just wasting people's time. They get frustrated. I've made that mistake already.
Sure.
So that'll come next year in a bigger way. But again, like I enjoy these kind of conversations too, and I think probably the people in your audience are going to be a little more value oriented and a little less zero-sum gambling oriented, and looking for projects a little more like Litheum. So, and yeah, the community obviously is that's the whole thing. Actually, I mean, your goal as a founder of a blockchain is to actually completely devolve yourself of any responsibility and to give the technology to the community. And then, it's just a thing of its own, and it kind of lives independently of the founding team. So it's all about the community. And that's, that whole dream that I spoke of earlier, where it's everything slow growth and organic, can only be done through the community. So, thank you everybody for being here and listening to this. And if you've got questions too, I'm always happy to answer questions for the community. We've got some of our big fans are here, which is good to see. I see Amazing and Albany, I know, has been, and Musa, obviously, some of our big supporters. And you're super early too. If you're here for Litheum, like I said, we don't even have a token yet. So
well, like I said earlier, it's a real opportunity to get in on the ground base on a really really early. Don't you wish you'd got in on Ethereum or Atom long before anybody else had heard of them? I certainly do, right? So there's that opportunity in people getting involved. And one of the things I like about what you've said, keep calling you Lithium, Clayton, is your sober approach. That it isn't rah, 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 flash in the pan, and that you've been around for so long and building this so long, so working on it diligently, that I think that is promising. Where are you getting the funding from to keep going? Because you have bills to pay and mouths to feed. And
Well, the funny thing is you can do a lot with quite a little. Like I'm always surprised by how much cash these other L1s are able to secure and then waste quickly. Blockchains are not easy to build. I mean, it has been years, and I'm like, I'm looking forward to getting to some kind of a milestone soon. But yeah, you don't really need that much. But anyway, I have been bootstrapping it for the first couple of years, and then we raised, you can see on our website, from our lead AlphaMe, who's been great. They're based out of Geneva, a bit of a sleeping giant. They've actually got quite a lot of capital under management, but haven't splashed around too much of it yet in the early stages, in the VC stages yet. And then we also got follow-on from Amber, which I don't know if people are familiar with Amber, but we're pretty proud to get them. I think they're one of the larger funds in Asia, and they've got a bunch of structured products, and they're in the market making space and very sophisticated. They've actually got the first AI spokesperson for a public corporation. They've appointed an AI as their public spokesperson, which is pretty wild. And they're very keen on the AI space, which is, I think, why they wanted to talk to us, because, like I said, I think we can really support the AI blockchain vertical really well with performance.
Wow. Okay, AI as PR spokesperson. Wow, it really is a new world that's developing. Clayton, is there anything else you want to let us know that we haven't covered?
Yeah, it's wild. No, not much. I mean, I think that's pretty much everything. Like I said, public testnet is soon. So if anybody's interested to run a runner, keep a close eye. We're going to be doing that hopefully in around 2 months, and then Q1 hopefully mainnet.
Okay, and you have a Telegram or a Discord group or both?
Yeah, we have both.
All right, and then people can find out.
The Telegram's a little more active, but the Discord's,
Okay, so people can find out from the website litheum.com, lithium.com, or also by clicking on the lithium.com Lithium icon here on the X space, and then following Lithium on X, and then you'll be able to navigate through to the other links. Clayton, I really, really appreciate you coming on. Thank you so much for this. And for anybody who's watching, thank you all for listening. I hope you find these X spaces valuable and useful. This is Crypto Rich and Clayton for Lithium signing out. All the best. Bye-bye.
Thank you, everyone.